Hello, I'm Clive Stevens and I'm Head of Tax at Kreston Reeves. Major changes are being brought in from the 5th of April 2016 to the way that dividend income will be taxed in future. These rules, which were first announced in George Osborne's budget in July 2015, will now be extended to cover certain capital distributions by private limited companies as well. These further changes were proposed in December last year, and it is intended that they will become law as part of the 2016 Finance Act in due course. But firstly, the good news. From the 5th of April 2016, there will be a tax-free allowance of £5,000 that will exempt dividend income up to this sum from tax. This will take dividends out of tax completely for many people. However, once this allowance has been used, any further dividend income received will be subject to an additional higher dividend tax of 7.5%. And in addition, the tax credit, which currently attaches to dividends, will also be eliminated, so that an additional tax cost will result regardless of the taxpayer's marginal rate of tax. This could impact significantly on those people who trade through their own limited company and who have in recent years chosen to minimise their tax liabilities by taking their income in the form of dividends. While declaring dividends is still likely to be the most beneficial way to take income from a limited company, the tax saving, when compared with other choices of income extraction, will be much reduced. The mathematics can be complex, and each individual circumstance must be looked at on its own merits. However, this additional tax cost from the 2016-17 tax year onwards could well be unexpected for the unwary and quite significant, as the example on screen shows. The government now also recognises that some people may seek to convert income into a form of capital to avoid this tax increase. Consequently, they will bring forward legislation to counteract such planning and have already released draft legislation for comment. We'd be pleased to advise viewers on the implications of these changes, which will seek to tax some capital distributions from private limited companies as income in circumstances where business owners have accumulated income and then seek to extract this as capital to take advantage of lower rates of capital gains tax. We are familiar with the idea of someone running a business for a short period of time through their own limited company and then liquidating it and taking the money in a capital form at reduced tax and then starting a new business again in the same trade. And it is this type of planning that the government wished to curtail. The proposals will therefore set out four main areas of concern. These are distributions on a winding up, where income has been accumulated and then is withdrawn later as capital. Disposals of shares to third parties, again, where income has been accumulated but then passed to a new owner as part of the sale. The repayment of share capital and the purchase of own shares by a company. There will be particular rules to apply when a private company is wound up. These targeted anti-avoidance rules will seek to tax distributions to shareholders as income, where they receive a distribution in the course of a winding up of a company, and then within 2 years, the shareholder continues to be involved in a similar trade or activity, and the arrangements entered into have the main purpose of obtaining a tax advantage. I'm sure similar arrangements will also be put into place to prevent this type of planning in the other circumstances I have outlined as well. And we will no doubt see the existing rules that apply to transactions in securities being tightened up. Reviewing existing arrangements and planning for this change before the 5th of April 2016 is now even more essential than before. So please take advice to mitigate the effects of this change, which could hit the proprietors of owner-managed companies hard. We are already advising a number of companies and shareholders on these imminent changes and the implications for them. And if you would like to know more, do visit our website or contact us direct.